Hello everyone, a huge thank you for clicking on this video today. We genuinely appreciate you spending part of your day with us.
We do indeed.
We have a massive story to unpack today. Usually when we look at earnings calls, we're looking for, slight adjustments in guidance or maybe a new marketing campaign.
Right, the usual stuff.
But today, we're looking at Pandora AS. And they aren't just tweaking the numbers, they are fundamentally rewriting the physics of their business model.
It's a complete overhaul. Honestly, in all my time analyzing retail, you rarely see a company of this size, one of the world's largest jewelry brands, decide to change the literal DNA of their product in real time.
It's a huge deal.
We're digging into their full year 2025 earnings call, and the headline isn't just about sales, it's about a survival strategy. It involves platinum, crazy commodity markets, and a really high-stakes gamble on consumer psychology.
It really feels like a burn the boats moment. We've got a lot of ground to cover, drawing from the presentation by Pandora's CEO, Berta de Pablos Barbier, their CFO, Anders Boyer, and Valal Aziz from Investor Relations. But before we get to the, sci-fi sounding alloy they announced, we have to look at the scoreboard for 2025. Berta called it a recalibration.
Right.
That's usually corporate speak for things didn't go as planned, right?
Often, yes. And here, it definitely fits. 2025 was a mixed bag. If you look at the full year, they managed 2% like-for-like growth.
And just to clarify, like-for-like is the truest measure of brand health, right?
Right.
Stores open at least a year.
Exactly. It strips out the noise from new openings. But the red flag, the real issue, was the fourth quarter. It came in flat, 0% growth.
Oof. In the holiday season, you really can't afford a flat Q4 in retail.
You can't. They blamed a weak macroeconomic environment, basically. People have less money to spend. But here's the twist. Despite the flat sales and what Berta called headwinds from tariffs and historically high silver prices, their profitability didn't collapse.
Okay.
Their EBIT margin, that's earnings before interest and taxes, it held firm at around 24%.
That is surprisingly resilient. Usually when sales flatten and costs shoot up, margins just get crushed.
Yeah.
How did they hold the line?
It's the unsexy side of business, extreme cost discipline. They've been squeezing efficiencies out of their operations, effectively saving money faster than they were losing it to inflation.
A well-managed machine then, even if growth is stalling.
A very well-managed machine.
So let's look at where that stalling is happening, because it wasn't the same everywhere. Berta highlighted a really interesting contrast in Europe.
This was a fascinating case study in modern marketing. Overall, Europe EMA was down 1%. But if you zoom in, Spain is beating. Meanwhile, Italy is struggling.
And the difference wasn't the economy.
No, it was the strategy. In Spain, they leaned into what they call earned media, getting influencers, fashion press, real people to talk about the brand organically.
Generating buzz.
Generating buzz. In Italy, they relied on traditional TV spots, just paying for eyeballs.
And that's not working anymore.
Not as well, no. It's cultural relevance versus just shouting your name. And that trend held elsewhere. North America was up 2%, but it's slowing down a lot.
Okay.
Latin America actually dropped 7%, but that was mostly because they messed with their pricing architecture. Asia, though, remains a bright spot, up 2%, with Japan really embracing the brand.
Okay, so knowing that paid ads are losing their punch, how does that feed into their new growth engine strategy?
Well, they're pivoting away from what they call more of the same. For years, Pandora has just churned out more variations of the same sort of playful charms.
Right.
Now they want distinctiveness. They're looking at the data and realizing they are totally underrepresented in aesthetics that are, say, organic or fine or bold. They want to be taken seriously as a fashion player.
Not just a charm bracelet company.
Exactly. This connects right back to that Spain versus Italy dynamic. They want desire, not just awareness. They want to be at the fashion awards, seen on a red carpet.
Shifting the budget from buying reach to earning heat?
Perfectly put. It's riskier, because you can't guarantee people will like you, but the payoff is much higher loyalty.
Okay, we have to get to the main event. The recalibration of 2025 is just the appetizer. The main course is this commodity crisis. Silver prices have gone absolutely banana pants.
Banana pants is the technical term, I believe. But yes, look at the chart. Silver used to hover around, $32? In some of their scenarios, it's hitting $82.
Wow.
For a company that makes almost everything out of silver, that just destroys your cost structure. You can't efficiency save your way out of a 150% jump in raw materials.
So they're backed into a corner. And their solution isn't just to raise prices, which might scare customers away. It's Pandora EverShine.
This is the game changer. They announced a new alloy trademarked as EverShine, and it's a platinum-plated metal.
Hold on. Platinum is a precious metal. Usually platinum is more expensive than gold. How does switching to platinum save money compared to silver?
That's the magic trick. It's plated. The core is a unique alloy, and they plate it with platinum. So the pitch to you, the consumer, is strictly about performance.
Not cost.
Not cost. The pitch is platinum doesn't tarnish. It's water resistant. It's hypoallergenic. It solves the #1 complaint people have about silver, that it turns black in your jewelry box.
Okay, so for the consumer, it's presented as better than silver. But for Pandora, the real goal is to stop buying so much actual silver.
Correct. Their strategic goal is to reduce their exposure to silver by roughly 80% over time. They are effectively decoupling their entire business from the silver market.
That's a massive operational pivot. But transitions are messy. Anders, the CFO, laid out the guidance for 2026, and it sounded like they're asking investors to put on a hard hat.
Oh yeah, 2026 is officially a transition year, and that is code for don't expect growth. They're guiding for organic growth between -1% and +2%. Like-for-like sales could drop by as much as 3%.
And what about the margins? If they're switching to this new, presumably cheaper alloy, shouldn't margins go up?
Eventually, yes, but not yet. For 2026, they're targeting an EBIT margin of 21 to 24%. That's a step back from previous highs.
Why?
They're facing a massive hit from commodities, tariffs, and foreign exchange rates. We're talking 250 to 350 basis points of drag.
And just to clarify for everyone listening, 350 basis points is 3.5%. That's a huge chunk of profit just vanishing into thin air.
It is, but the promise to investors is this: stick with us. Once we scale the platinum plating, we shift our cost base. Right now, a silver charm is 75% raw material cost.
Right.
With the new alloy, the cost shifts to labor about 50%. And labor costs are stable, commodity markets are crazy. They are trying to turn Pandora into a predictable, high-margin business again.
Aiming for that 21% plus margin in the medium term.
That's the goal.
Okay, that sets the stage. They're changing the product, changing the marketing, and asking for patience on the financials. Now let's get into Q&A because the analysts on the call really drilled down into the risks here.
They did not let them off easy. It was rapid fire.
Let's start with the first question. This came from Chiara Battistini from JP Morgan. She immediately keyed in on that gloomy guidance. She basically asked, why so pessimistic on North America? And how on earth do you explain this platinum switch to a regular shopper when it comes to price?
Good questions. The North America answer was, sobering. The company clarified that the region is 1/3 of their total business, and they expect it to perform within that -3 to flat range.
And because it's so big, if North America sneezes, the whole company catches a cold.
Exactly. It drags the whole group average down.
Yeah.
But on the platinum communication, Berta was very confident. She said they are not going to market this as a cost-saving measure or a silver replacement.
Okay.
They're marketing it based on appeal. The pitch is simple. This is a precious metal. It's platinum, and it outperforms silver because it doesn't tarnish.
But are they charging precious metal prices?
And that was the kicker. No, they are pricing it 1-to-1 with current silver prices. So you walk into a store, and the platinum-plated item costs the same as the silver one. They're banking on you choosing the one that's tarnish-free.
That's a fascinating psychological experiment.
Yeah.
Here's a better metal for the same price.
Okay, next up we had Grace Smalley from Morgan Stanley. She asked about newness. Are they using data or just taking a fashion risk? And she wanted to understand the mechanics of getting margins back up to 21% after the dip.
Yeah, a technical but crucial question. Pandora insisted they aren't just chasing trends. They're using data to deploy products better. Berta used the Bridgerton collaboration as an example. That wasn't just, let's make flower charms. It was a calculated move to tap into a specific cultural moment.
I see.
As for the margins, Anders explained that the path back to 21% is all about scaling efficiencies. This is the taking the medicine part. Right now, they have to use OEM's original equipment manufacturers.
Outsource. Exactly. They're outsourcing the plating process because their own factories aren't ready. Outsourcing is expensive. It eats the margin. The recovery happens later when they bring all that plating in-house.
Pay a premium now to save money later.
Yeah.
Makes sense.
Yeah.
Moving on, we had Mr. Chabert from Citi. He asked the question I think a lot of purists are thinking, are you killing silver entirely? And frankly, why didn't you do this years ago if it's so great?
Right. The answer on killing silver was no. They were clear that about 25% of the assortment, mostly the really sparkling stone-heavy items, will stay in silver. They know some people want the classic metal.
Okay.
And for the why now question, Berta revealed this EverShine alloy wasn't just sitting on a shelf. It took them 18 months of R&D to perfect. The technology literally wasn't ready before.
Fair enough. Next, Lars Trapper from Carnegie took us into chemistry class. He asked about the alloy's composition. Is there palladium in it? Palladium is incredibly expensive. And he asked a very sensitive question. Are you firing your craftspeople in Thailand?
That labor question was vital, and Pandora was very clear. No layoffs. They explained the EverShine alloy behaves exactly like silver during crafting, the casting, the stone setting. So they need all their current staff. The only part being outsourced temporarily is the final plating step.
That's a relief for the workforce.
As for the chemistry, Anders confirmed the palladium content is tiny, so it isn't a financial risk. They dodged that bullet.
Okay. Let's talk about who buys this stuff. Christian Godikson from ACB was next. He asked about potential price hikes and wanted details on consumer demographics. Who actually likes this new metal?
On pricing, Anders said the guidance includes a standard 2% price increase, but he kept saying the environment is dynamic. All their competitors are facing this silver shock too, so if everyone else raises prices, Pandora might have room to move as well.
So they're watching the competition.
Closely, the demographic data was really counterintuitive. They found that Gen Z consumers love the new alloy. They see platinum as cool and modern, but older consumers also liked it because they recognize platinum as a high-value heritage material.
So it works for both, but for different reasons.
Exactly.
But there is still a perception risk. And Laura Bismuth from HSBC asked the hard question. She asked about the pilots. Do people hear plated and think cheap? And does it rub off?
This is where it gets real. Berta was emphatic. Platinum plating is different from gold plating. When gold plating wears, the color changes. When platinum wears, it just develops a patina. It might get a little less shiny, but it doesn't change color. Plus, it doesn't tarnish.
Okay.
They tested this with almost 25,000 people. The feedback was that consumers accept they accept gold-plated, but they view platinum as an upgrade because of those performance benefits.
So they're betting that utility beats purity.
Yeah.
It just works better. Next up, Andre Thorman from Danske Bank. He asked what I'll call the panic button question. If silver prices crash, do you go back? And he also asked about share buybacks.
The answer was a hard no. They are burning the boats. This is a strategic risk reduction. They are not going back to being dependent on silver.
Wow, all in.
All in. Regarding buybacks, Anders confirmed they're paused. They're borrowing money for this transition, so their leverage will be high. They need to spend their cash on the transition, not on buying back stock.
Makes sense. Finally, we had Anthony Charshivi from BNP Paribas. He asked if the brand is moving toward luxury, and he asked about inventory levels.
Berta shut that down immediately. No, Pandora remains accessible. They're not trying to be Cartier. In fact, the whole reason for the switch is to keep prices accessible. If they stuck with silver, prices would have to go way up.
So it's an affordability shield.
Exactly. On inventory, Anders admitted it will go up temporarily. They'll be buying expensive silver in the second half of the year before the cheaper platinum alloy really takes over.
Wow, that was a comprehensive Q&A. They really covered every angle.
Yeah.
So if we pearl back, how would you wrap up the main themes here?
I think there are four main pillars. First, the transition year. 2026 is about taking the medicine. Growth will be flat or negative. Second, the silver crisis. This wasn't a choice, it was a reaction. The market forced their hand. Third, the platinum pivot. They're betting the company's future on EverShine to stabilize margins and offer a better product.
And the last one.
And finally, the financials. Dividends are up 10%, which shows some confidence, but share buybacks are paused to fund this massive overhaul.
It really is a fascinating case study in how a major global brand has to adapt to these huge macroeconomic shocks.
Absolutely. It's a bold move, but
Right.
based on the data they presented, it seems like a necessary one.
Well, that brings us to the end of our discussion today. We really hope you found this breakdown of the Pandora earnings call valuable.
It was a pleasure walking through it.
If you like this video, please go ahead and click that like button, share it with anyone who might find it interesting, and don't forget to subscribe so you can stay tuned for our upcoming content. Thanks for watching.